The 8 megawatt site expected to generate $3.5 million annually. And with Ghummud and Kasna both having revenues kicking in, the model quickly starts to compound. More cash flow allows us to secure more sites.
Hello, you're watching Proactive. I'm joined by Paul Elliott, the CEO of Active Energy. Paul, very good morning. You've redeployed infrastructure from your 8 megawatt sites in the UAE to Ghummud to accelerate revenue. Can you explain simply how that works and what it means for cash flow?
Good morning, Stephen. Thanks for having me. The strategy is quite simple. We're preparing the 8 megawatt site, if you recall, for Bitdeer, for the new JV we're entering into with them. So our standard infrastructure that we had there has now been utilised over at the Ghummud site. So obviously it's going to bring forward the timelines, etc. Our modular infrastructure is effectively plug and play. So it allows us to deploy operationally, and then it's going to give us immediate cash flow generation. The 8 megawatt site expected to generate $3.5 million annually. And with Ghummud and Kasna both having revenues kicking in, the model quickly starts to compound. More cash flow allows us to secure more sites, so it makes it easier. And then obviously go back again to the 8 megawatt site. With that rolling out for the Bitdeer contract, we've also got our share with the Bitcoin with them.
The Ghummud site is expected to reach full capacity within 6 weeks, generating around $400,000 per MVA annually, Paul. At what point does the broader platform really start to scale?
We believe we're entering into that phase now, in all fairness. Once the 8 megawatt site and the Ghummud and the Kasna sites, they're all going to be there. And we've done that within less than 12 months. We've progressed from an initial concept to roughly 15.5 megawatts of either deployed, operational or secured. And we continue to see strong demand from customers looking for low-cost hosting capacity. What's quite exciting is that every successful deployment strengthens our platform, and we believe that there is significant opportunity to scale beyond our current rollout plan.
Paul, you now have the Sheikh's office and Black Road alongside the proposed Bitdeer partnership. How do these pieces fit together, and what does that institutional backing unlock?
It's very important. It's a very, very important development for AEG. In the GCC region, growth is often driven by a level of engagement that you've got. And obviously, it's just all about the alignment with the regional vision. So realistically speaking, it's a massive big thing for us. The relationships with the Sheikh's office and Black Road and with Bitdeer will help elevate the company's position within the market, and it's going to open doors that wouldn't otherwise be open and would take years to build. Importantly, these relationships have already helped accelerate our path towards 100 megawatts, including active support in securing some of the 50 megawatts of additional capacity that we see with the Sheikh's office. We see this as a cornerstone for the next phase of growth.
As you say, you're targeting 100 MVA, but currently at 8 MVA. What are the key milestones between here and there, and what's the realistic timeline, Paul?
Firstly, we're not 8 megawatt, we're 15.5 megawatt. When you break down the numbers, you've obviously got the 8 megawatt, then you've got the completion of the 3.5 megawatt, and we've secured 1.5, and then the additional one with the Taweelah site that we announced a couple of weeks ago. That takes us to over 15 megawatts, and that's within less than a year again. Alongside this, the facilitation agreement linked with the Sheikh's office has the potential to unlock a further 50 megawatts. That is not just a guesstimation, that's there, it's active, which could significantly accelerate the growth plans. With the opportunities currently in front of us and the strength of the team now on the ground, we believe that the 100 megawatt is highly achievable. It's not just pie in the sky.
60% of your UAE capacity was pre-sold before the site was even energized. What does that tell us about demand, and how are you thinking about pre-selling future sites?
But the demand is very strong, and we could have actually pre-sold a lot more. But obviously we're just holding back because behind the scenes we was always working on the Bitdeer contracts, etc., which is different from the pure hosting. Many of the customers were originally waiting for the capacity for the 8 megawatt, which is one of the reasons, again, we moved quickly, put them over to the Gunnion site, and we could do the same with the Kasna. We already knew the demand existed. At the same time, Bitdeer wanted the purpose-built cornerstone, which is what we're providing them with the 8 megawatt site. Going forward, we see two clear growth models emerging: strategic JV style deployments with larger partners, and the opportunistic hosting and the offtake agreements through acquired attractive grid connections that we're seeing with the smaller sites. The early pre-sales gives a strong indication and strong confidence that the market is looking for exactly what AEG offers.
Well, congratulations on these latest milestones. I hope you'll continue to keep us updated on your progress.
Thanks a lot. Thanks, Stephen.
Paul Elliott, the CEO of Active Energy.